BeefLedger is a new company with a very specific goal, and that goal is to ensure the provenance of food supply, particularly in the beef sector. And joining me right now is co-founder Warwick Powell. Hello, Warwick.
G'day, Tim. How are you?
Very well. Now, you've started something very interesting in the area of provenance. And can you explain exactly what provenance is in the beef industry?
Look, we use the word provenance to describe something quite broad, which in many ways is best understood by the life story of something. The scientists will often say that provenance is specifically about a point of origin of something, but for us, provenance tells a broader story, which is the life story of, in this case, a piece of beef and the animals that provided that beef, the farms that they came from, the people who worked the farms, etc., etc. So it's a bit of a life story about how something ended up on our plate.
And so that's primarily to do a couple of things. Number one is secure the supply chain and make sure that the beef is actually comes from where it comes from and goes the route and is not over temped. I do understand that you've got temperature sensors in the freight, but also on the recipient side, they understand that beef is guaranteed to come from what the packaging says, which is a big problem, particularly in China. Am I correct there?
Yeah, look, Tim, basically, in a technical sense, we would say that we're tackling the question of information asymmetry. Now, what do we mean by that? It's a pretty technical idea, but it basically means that one side of a transaction knows more about something than the other side. So typically, in the supply chains we're talking about, the seller of the product knows more about the product than the buyer does. And what we're trying to do is even out the information playing field. And we're doing that for some really particular reasons. Firstly, as you said, is to give the buyer greater confidence that what they're getting is actually what they're meant to be getting, what they're paying for. The second thing, though, is that in supply chains like beef, where product quality affects pricing, to be able to give buyers confidence that this particular product is of a better standard than something else enables the supplier to access the right pricing for that product. So if there are two products available, a good one and a bad one, then and the good one can earn twice as much as the bad one, well, the supplier really needs to make sure that the buyer knows and is confident in the fact that they are getting the good one, because then they're willing to pay more. The third reason that we embarked on this journey was that by addressing that information asymmetry question, we're able to also drive innovation in supply chain financing. And that ultimately has been, in some respects, the underlying driver of our work in supply chains.
One of the challenging things, I guess, for people to understand about how does this all fit together and how do you track, the supplier, the end user, the in-between journey of that food item? How do you track that? And I understand that blockchain comes into this story.
Yeah, look, how does it all fit together? There's lots of moving parts in a sense. So how do we boil it down to make it something that we can get our heads around and get our technical design team to get their heads around, and importantly, to get people in communities to be able to get their heads around something that on the face of things appears complicated? Probably the best way of thinking about the supply chain is that a supply chain basically involves three moving parts. The first moving part are things that move from the production side of a supply chain and eventually ends up being something that we consume. So think of it as some livestock eventually becoming beef on the plate. So that's the things moving along. Moving in the other direction, Tim, is money. Because as that thing goes through its different stages of production and packaging and branding and all of that, it's changing hands. And every time it changes hands, money changes hands. So we often like to say that just as things move down a supply chain, money moves up the supply chain. Now, what holds those two bits together, one going up, one coming down? It's information about things that actually holds it together. And think of it like this. When we go and buy something, we'll happily hand over the cash when we know or believe with some level of confidence that what we're getting is what it's meant to be. So I'm happy to pay X dollars for a piece of Wagyu steak on the basis that I believe that it is a piece of Wagyu steak. And those are the three key moving parts of a supply chain ecosystem. Now, why blockchain? Well, going back to what I said earlier about how the buyer and the seller know different things, if the seller knows that they can get more money by convincing people that what they're selling is the good thing and not the bad thing, the buyer is also suspicious, if you will, of the seller's claims. So the seller is always incentivized to say that they're selling the good thing in the hopes of either getting what their just desserts are or getting more than they're meant to get because they're actually selling the bad thing. Now, blockchains allows us to overcome a fundamental problem in that
Is that
situation.
called trust?
And that's trust. And that is too much trust is invested in this traditional system where you have to trust the one actor and what they say, the claims that they're making. So a phrase that's often used in the food supply sector is people make credence claims. They're making claims about the credence of something. So they're making some claims, and there's no reason why the buyer should actually believe somebody. In other words, there's no reason for them to trust what that seller says. So what we're trying to do is to create what Satoshi Nakamoto set out doing, which is to replace the need for that kind of trust with a system that is highly dependable and which uses economic signals to align what the seller wants to say about what they're selling and what the rest of the world thinks about what the seller is saying about their thing. Now, think about it like this. I can stand there as a seller of something and say, I'm selling the good stuff. And no one believes me because they fully expect me to say that anyway. So what do? Well, I then say, well, don't believe me. Here's a certificate from so-and-so, and here's 5 reviews from so-and-so, and here's a restaurant down the road, and here's a chef and such and such. All of these other people are actually saying that I'm selling the good stuff.
So you have an aggregated validation of the supply chain.
That's right.
From collecting data from each point, you're saying?
Collecting data from each point and from the perspectives of the different people involved in the supply chain who can lend their reputational value to supporting the claims that are made. Now, of course, when you get a group of people together, all saying that something's great, it is possible for that group of people to have organised themselves to take advantage of others. So we call them cartels, right? That they've colluded, that they've gotten together and say, right, between all of us, we're going to tell everyone else that this is the best steak you can possibly ever get, charge them a lot, and then I'll share the difference out with all of you for backing up my story. Now, how do we overcome that? Well, we overcome that in a number of ways. One is that we have transparency, which means that over time, if you consistently keep making falsifiable claims, keep telling porkies, so to speak, eventually you get caught out. Someone's going to call BS on you or that little group. So that's the first thing. The second thing we do is, in addition to having transparency around identities, is we enable reputations to begin to take valuable stock. What that means is that, and this is again very human, when somebody with a solid reputation makes a claim about something, collectively we have a tendency to believe them more than we would someone who doesn't have a good reputation or doesn't have a reputation at all. And so through collective action and the building up of systemic memory about actors who do the right thing consistently, those actors will actually emerge and rise out in that community as actors with solid reputations. So they're two important things that we do. We add one last piece over the top of all of that within our own BeefLedger network, and we call this community attestation. And what that means is that the small group of people come together and say, this is a load of the best cattle you can get, and 5 out of 7 of us have all agreed that. So we put that information onto the blockchain, but we take that decision, that claim, and we ask the community as a whole to attest to it as well. Now, attesting to it is basically a voting procedure, but we do it with economic incentives built in. So the mechanism works something like this, Tim. A group of people make a claim, and we call that a data proposal. So they're saying, this load of cattle is the best load of cattle under the sun, and these are all of its good properties. And we've asked the community to affirm that or to attest to that as well.
But hold it for a second. Are you incentivizing the community by reward to attest to the product validity?
No, and here's the mechanism. So, well, in a sense, yes. So we have a mechanism that rewards people for voting with the majority. Now, the majority could be a no vote or a yes vote. So just bear that important point in mind. So the mechanism works like this. The proposer puts what we call a proposer fee into the attestation pot, and voters who participate in the vote pay a voting fee. So everyone has something at stake. So that now we have an attestation pot which has voter fees together with the proposer fees. At the end of the vote, the majority get to carve up the pot in a particular way. They get to get their voting fee back. That's the first thing. And what's left, which is the fees from the losers, the minority voters, as well as the proposers, that gets divided up between BeefLedger, which takes 25% of that pot, and the majority voters get the remaining 75%. So people are incentivized to vote in a way that they believe everyone else will vote. Right? So the mechanism is actually asking you to think about, how do you think everyone else is going to vote on this? So you start to think about what it is about this proposal that might affect how everyone else will judge it.
Do you think that makes people more? Do you think that makes people more honest about their opinions and their vote?
It actually means that they're honest to the extent that they're thinking about what everyone else will do. So it's not about my opinion per se, it's about my opinion of other people's opinions. And funnily enough, in a refracted, indirect way, we're often far more truthful about what we think everyone else will think than we are about our own selves. And the economic mechanism there derives from some game theory that was first invented, if you will, or thought about by a guy called Thomas Schelling. So Thomas Schelling was curious about how it is that groups of people arrived at common truths without actually communicating with each other on a question. And so the question for us is this proposal valid? Is it legit? And groups of people arrive at a common view about whether it is or it isn't, based on a whole range of views about what other people will think. And those mechanisms prove to be quite robust over time, particularly as people inside these ecosystems build up their reputational capital. So, for example, I've been a data proposer for a year. I've proposed lots of proposals, and all of those proposals have been accepted, and the feedback from my product, also from consumers, has been very good. In other words, I've cultivated and earned a good reputation. Someone else is totally unknown to the group and also puts proposals up. Now, when people look at me and when I put the proposal up to him, they say, he's credible. It will be a sure earner. In fact, I'm so confident that everyone else will vote yes, that I'll vote yes as well, knowing that I'll earn some money by voting with the majority. Whereas someone who's unknown to the group, we don't know what their reputation is. Well, it's a 50-50 bet. But because it's a 50-50 bet, in other words, a higher risk, we also get a higher earn potential. Right? So the mechanism really is about how large groups of people arrive at common views about things without it being explicitly coordinated. So that's what we add on to our mechanism. So we have those two steps to move us away from a situation where people are dependent upon the claims being made by the seller of the product.
Wow. A lot of thought's gone into that, Warwick. Now, how does this relate to the actual supply chain of the BeefLedger product, or what's the product that the BeefLedger is involved in this case, the beef?
So these mechanisms that I've just described are ways in which information goes onto the blockchain. So every step of the journey that the parties in that supply chain want to credential to the blockchain goes through this mechanism. And so for us, the main steps are the following. Firstly, of course, we register assets to the blockchain, and that's the first thing that has to be done. And we do that by scanning the unique identity of an animal that is on its ear tag, and taking that identity and putting that identity on the blockchain. That's the first thing we do. We then take the blockchain hash, which is the unique identity, and put that information into what's called a non-fungible token. So now we have a unique identity that is immutably recorded to the blockchain, together with a token that is permanently connected to that identity. And that token, think of it as an identification certificate.
An ID tag.
An ID tag.
A digital ID tag.
That is transferable and tradable.
Mm-hmm.
So the first thing we do is create those two things. Then we have what we call loading events and unloading events. And that's because in any supply chain, we move things. And when we move things, it's actually a combination of two activities. Firstly, we have to load the assets up, and then we unload the assets at some other location. We have what we call measure events. Now, measure events is basically when we're updating the attributes of the assets themselves. So, for example, in our case, an attribute that we might be updating is the weight of the animals. So we have a weight update event that goes through the same processes that I described to you before. And then we have what we call the consume event. In other words, when that asset is used finally and can't be reused again, either because as an animal it's been slaughtered and processed into meat, or as a piece of meat it's been consumed by human beings.
What happens to the ID tag at that point?
Okay, so the ID tag works like this. The ID tag remains with the owner of the asset because it sits in the wallet of the person that firstly registered the asset. So they have, all those ID tags in their wallet. When they're selling the assets, so we're selling cattle, for example, or selling boxes of meat, we're selling the physical objects, so we can scan the ear tags to identify the things that are being sold. From that, we also identify which of those digital ID tags need to be sold as well. And we have an escrow smart contract where the buyer and the seller enter into a deal room, and the seller puts those digital ID tags into the escrow contract. The buyer puts the relevant number of tokens, beef tokens, into the escrow contract, and they sit there in that escrow contract until an information condition is met. Remember earlier I said that we're happy to part with our money so long as I'm confident that what I'm getting is what I'm meant to be getting.
Mm-hmm.
That's just information, right? That's just information. So when we are willing for that exchange to take place in the smart contract, we have to have some information conditions have to be satisfied. And those information conditions are satisfied when, for instance, the RFID tags are scanned at a location to confirm that the goods have arrived at a particular place and at a particular time. That could be the information condition that triggers the payment of the smart contract. Now, until that happens, the parties can pull their tokens out back to themselves. But once they've committed to the deal, the only way that those tokens can be withdrawn from that contract is when that information condition is satisfied, which means the right to withdraw the tokens flip. So now the buyer gets the digital ID tags and the seller gets the beef tokens. Or if the condition fails, in other words, the animals didn't arrive, the contract exhausts. So there's a time frame, it exhausts. And at the point of its exhaustion, the seller gets to withdraw their own ID tags and the buyer gets their tokens and the world goes back to normal.
All right.
So then there's the consumption.
Right.
Okay, so that was just an exchange. We need to also confirm that something's consumed for good. Otherwise, you've got the risk of theft, right? So that somebody could have this ID tag and keep reusing it. So we want the person who's consumed the asset at the end to tell everybody in the community that that asset is no longer available for sale.
So they need to upload an attribute saying consumed.
Well, what they do is that they send that ID tag into a consumption smart contract. They write a review about the product that they've just consumed, and they get rewarded with a rebate in effect. They get paid for confirming to the world that that asset is no longer available to be bought and sold.
All right, so what's fuzzy for me right now, Warwick, is the differentiation between an industrial scale or wholesale supply chain to supermarket as opposed to just the average consumer, because I'll admit I've actually bought beef with the beef token on what's called the Telegram chat, which is a very interesting system. We might talk about that in a minute. But where's the line between the average consumer who's not going to be worried? They just want the provenance, tick the box, it's on the plate, they've eaten, they're done. But will they be writing reviews?
Well, in some places they will be, I think, more so than in other places. And that's because public cultures are a little bit geared towards the role of reviews and the role of earning rewards in writing reviews. So what we've done there is that we've taken the starting view of that consumers themselves are also producers of important information or data that the community gets value from.
Absolutely.
Whether it's a review of something or simply confirming that that asset is no longer available for sale. That's actually a really important bit of information for a community because it means that you reduce significantly the risk of counterfeiting and fraud by reusing this particular identity. So those two services, if you will, to the network, to the community, are ones that we reward the consumer with. And so people can earn money, basically, earn beef tokens by doing a little service to the community. Yep, I've consumed it, no one else can use it again, and I think it's been great, and I rate it, and therefore that information feeds into the overall network attestations. So it builds reputations.
Yeah, well, what a marvelous concept. I mean, it's more than a concept now. You've been working on this for a couple of years at least that I know of.
About 3 years now, from go to O.
Yeah, and it's I think it's morphed a little bit over that time too, because you've started to understand some of the more complex issues around supply chain, and then also how to integrate that with the end consumer. And so big challenges, but I can see a lot of thoughts gone into this, and you're very well down the track. So how do people see what you're doing and understand and be involved and get some of this premium beef that the blockchain is talking us about?
One of the tricky things, Tim, in dealing with real things, tangible physical objects like beef and even wine and things, is that we have to straddle a number of different worlds. We've got to straddle a cryptocurrency world or a data world. We have to straddle the real world of physical supply chains. And of course, we have to be mindful of the issues around logistics, particularly dealing with perishables like meat. So over the last 3 years, we've gotten our heads and ourselves corporately involved in all of those aspects. We've obviously built out a technology backend which allows us to track assets and allows us to facilitate cryptocurrency-based transactions with confidence. We have developed partnerships in supply chains, working with cattle producers initially in Australia.
I know. I noticed today you jumped the fence. Yep. You're offshore now in South Africa. Is that correct?
We are. We actually signed some. We formed the JV a few months ago, but we've just been waiting to bed down some internal operational details before announcing it. So we've announced our JV today. But we dived into the real supply chain, and that meant really getting to understand the production systems of cattle. And we've also been heavily involved at the distribution side into the food services industry, particularly in China was our target market initially, and then into the households market, so the B2C market, which really took off as a result of COVID, where restaurants shut, number one, consumers couldn't go out, number two, and therefore they had to get food delivered home. We've shifted some of that attention post-COVID to working on some domestic implementations in Australia. So we have activated a Telegram functionality using MorphChat, which you mentioned earlier, and I'll come back to in a tick. In some ways, doing the work in Telegram, though, has been inspired and informed by the work that we've done in social e-commerce in China, where the use of apps and social media apps such as WeChat to facilitate commerce has been commonplace now for the best part of 6 or 7 years. And so we've grabbed the learnings that we've had in terms of social e-commerce, B2B and B2C implementations in the China environment and adapted them to a technology platform that is more readily accessible for people, firstly in the crypto community, but also
the Western world.
China.
Yeah, outside of China.
World.
Yeah,
Yep.
It's interesting how China and possibly even Japan have been able to create mobile apps that have strong e-commerce functions, and that's missing particularly from the Australian landscape. I think Facebook and Twitter about the limit of the Australian social media in general, but now there's this thing called Telegram. Tell us about Telegram. Tell us about how the BeefLedger is interacting with Telegram.
Yep. So Telegram is an end-to-end cryptographically secured messaging platform. There's quite a few messaging platforms around, but this one's outrageously popular in the Western world. There's about 400 million users globally.
That's about
about
double the population of the US, or well, not quite double, but that's a big number.
Double the adult population of the US, you could say. So it is a very substantial number and is used in just about every country in the world, probably with the exception of China. And the main reason for that is that the Chinese have been well in advance in terms of a lot of this social messaging through things like WeChat from the early 2010s. So Telegram emerged about 4 years later. So Telegram's been around 6.5, 7 years. WeChat had already been taken off, and WeChat started to roll out its e-commerce functionalities and payments functionalities about 6-7 years ago as part of a big push towards the creation of a digital economy and digital payments. So we've got Alipay in China and WeChat Pay are the two big players. And within the WeChat ecosystem now, there's a whole world of mini apps and shops and stores and you name it. So it's very sticky and it's very multidimensional, which means that once people are actively engaged inside that WeChat world, you can do just about anything in it. You can buy your train tickets, through to referring your friends to a restaurant, through to running your own little e-commerce platform through it, making payments and transfers and those sorts of things. So we were partly inspired by that experience and looked for something in the Western world where we could emulate something similar. And Telegram provided opportunities to do that, particularly with its bot technology, right? So inside Telegram, there's a whole range of bots, and you can develop your own bots that can take instructions and do things, right? Receive messages, send messages. And those bots looked a lot like the early days of the mini apps in the WeChat world. So we thought there's got to be a way that we could develop that bot out in a way that is supportive of the cryptocurrency activities we were involved with, but we started to build that bridge between the crypto world and the world of the fiat currency and of people who weren't so familiar with crypto. And we got together with the guys at Metamorph. We've been working with them already on our decentralized exchange. And we brainstormed some of this and came to, I guess, a conclusion that it was doable. So we got behind the guys at Metamorph to design and develop out this prototype. And as the first use case, so Beef on Morph Chat has been and was the first use case. And we've now just rolled out in the bot a marketplace, so you can start to buy and sell things as well.
So
now,
to be clear, for people listening, Telegram is the messaging platform, right? And then you've got the BeefLedger is a channel on that platform, and Metamorph is another channel on that platform. So these channels are talking to each other, correct?
We're talking to each other with communities that are collaborating. And so Metamorph developed out this, what we often call the day wallet, the Morph Chat wallet. And that wallet enables the transfer of cryptocurrencies at zero cost, so long as it's happening inside Telegram. So the way that works is that if I've got some cryptocurrency tokens on my Morph Chat wallet and I want to send some to somebody, I just reply to a message from that person and give an instruction such as /tip 100 beef and send that message, and the bot deducts 100 from my wallet and adds it to say your wallet.
So you can make a financial transaction on the Telegram messaging platform.
Correct.
So you can buy beef. You could exchange your cryptocurrency for real beef on Telegram.
For real beef. That's it. And that's what people are starting to do now. So the marketplace was launched a couple of days ago, and that marketplace allows us to manage inventory a lot better. We can run referrals now through it. We're starting to, and hopefully within the course of this week, we'll have the workflow logic finalised on, for want of a better term, a group buy function. I think we're likely to call it something like impact consumption or impact procurement, impact purchasing. And that's essentially the ability to say, hey Tim, I'm buying this great sirloin. But if 10 of us buy this sirloin in the next 24 hours, we'll all get 25% off. Why don't you buy some as well?
Group buying.
And it tracks, so it's a group buying. So it tracks all of that, and we're looking at delivering the discount, obviously, to all the participants, but also to incentivize the group leader to kick off these group buy activities. We're going to give them a rebate as well. So everybody will get a discount, and the group leader will get a rebate of so many tokens into their wallet. Now, all of these transactions operate in what is called the off-chain world. Best way of thinking about this, in this. I often think of these the blockchain world and the non-blockchain world as a couple of islands, if you will, and or a couple of rooms separated by a long corridor. And inside one room, the red room, you can do all sorts of things using the red token. And then at the other end of the corridor, you've got a different room that uses the blue tokens, and you can do all sorts of things using the blue tokens. So when you're inside that red room, you're doing all your stuff, and then you say, well, I want to grab some of my red tokens and take them over to the blue room. I want to be able to do stuff over there. So what do I have to do? Well, I basically go to the door, and I tell the doorman on the red room to say, look, you know, I'm taking this stuff out. I go to the cashier. I hand over the red tokens to the cashier. The cashier has a look at the exchange rate, and then hands me the blue tokens, and I walk up the corridor and I walk into the other room, and I've got the blue tokens for the other room. And that's essentially what happens as people move from the blockchain into the Telegram world, and then from the Telegram world
back to the blockchain
work. Yeah.
But what interests me is the zero transfer cost. I mean, everyone's aware of a $2 ATM charge when you get money out of the ATM, but on Telegram, this functionality has zero cost until you want to move those crypto assets or into another economic cycle, liquidity somewhere else, as you point out.
Literally, the only time you incur fees is when you take them out of Telegram. You can bring them into Telegram at no cost, but taking them out of Telegram back onto the Ethereum mainnet, which is the public blockchain, that's when you have to pay some fees.
Mm.
And you pay those fees in the Metamorph token, which is Metam. And now, what we're finding is that people see this function as a bit of a day wallet. It's a place where, you know, it's like the old days. You know, you don't carry around your hunk of gold, right? You leave that in the safety deposit box, but you need a bit of cash to go and to go out to have lunch or whatever it is, and so you go and just put a bit of cash into your day wallet, and it's there for your convenience and low cost and all that sort of thing. But you don't carry enough cash to buy a car or a house or whatever. You know, they're done through bank transfers. So we look at the Ethereum mainnet as a bit like that high security environment where that's where you're holding most of your crypto assets and crypto tokens and things. But it's not very convenient. It's a bit expensive at the moment. Right? So get some of that stuff into a day wallet so that you can just use your assets cheaply, free, convenient, instant. Right? These transfers are instant.
Yeah, that's what I really like that about that. Straight away.
Right.
You
Straight
own
away. There's
no cost transfer of assets. Wonderful. But listen,
great, isn't it?
What you've outlined it's very new for a lot of people, and I dare say some people are going to have to listen to this a few times to begin to understand what we're talking about. But where do you see BeefLedger going, this whole ecosystem that you've developed, say in the next 2 to 5 years? It's impossible to crystal ball it, but where are you headed?
We're heading in two main directions, Tim. One is we're taking the core technology that we've developed largely in the Australia-China marketplace into other jurisdictions. So we're moving into beef supply chains in other parts of the world. Mentioned earlier the South African joint venture, which we're really pleased to have kicked off there. And we're also working with people in Latin America. In terms of buy-side markets, we have a deal that we've just done with some distributors in Japan, which we'll announce officially at some point in time. So your listeners are actually the first to hear that we've done something there. And our team in Hong Kong are working also across some of the other markets of Asia. So the first thing we're doing is moving out of the Australia-China beef piece into the global beef piece. The second thing we're doing is grabbing that underlying technology and know-how in terms of its financial technology, the decentralized supply chain, re-engineering protocols and all that stuff. And we are now translating that into a more general project to develop smart trade hubs and smart trade networks. And we're doing that in collaboration with the Future Food Systems Cooperative Research Centre and the guys at QUT, Queensland University of Technology, so that we move from being involved in beef as a vertical to enabling and supporting decentralised technology supported cross-border trade, principally in food systems, but obviously the underlying technology can then be applied into other...
It could be applied anywhere.
Foods
and
anywhere.
You've picked a very challenging product to start with. I mean, transporting perishable items is fraught with all kinds of things. Whereas a non-perishable item, you make it, it's on the shelf, and so there's not that urgency. Delivery's a lot easier. Well, that's really fascinating.
We picked beef, Tim, because it was difficult, and also because we'd had some experience in it, as we've discussed in the past. And the difficulty meant a few things. One, we weren't going to have so many sort of competitors all diving in all at once. Two, it enabled us to tackle hard problems. And once you can solve hard problems, it's actually really easy to solve easy problems. So, by spending our time, committing time and effort, working with researchers at Queensland University of Technology and other places to really think hard about complicated problems, I think we have reached a point where we have designed and coded an ecosystem that will increasingly be easier and easier to use, that will tackle these issues around fraud, around product substitution, around authenticity value, provenance, as we discussed, low-cost cross-border transactions and all those things in a way that delivers people confidence. We have spent an inordinate amount of time actually making sure that the engine works, that the drive shaft works, steering wheel's there. I must say what we're not very good at is making decisions about whether the seat should be leather or vinyl, whether the outside should be red or blue or green. But the UI UX pieces is something that we'll start to commit more and more time over the next 6 to 12 months on.
Wow. Now, BeefLedger.io is the website where people can go to learn more about what you're doing. But as added to that is that you are trading on cryptocurrency exchanges, and so people can obtain the beef token at the current time. And with the increase in the liquidity and the value of this type of e-commerce transaction, I can imagine that beef tokens will appreciate in price over time.
Look, we certainly expect so. Beef token is a generally tradable token on a number of exchanges. The Gold Fund exchange is one, where it is paired with G-Fund and with BTC. We have our own DEX, which was built by Metamorph for us. So we're paired there with Rapdisa and also Metam. And we also have a small liquidity pool that we've just been deploying on Uniswap. So there's a number of places where beef tokens themselves are available.
But if people don't have cryptocurrency yet, they can still obtain beef tokens.
They certainly can, and they do that through Telegram, actually. So they need to get themselves a Telegram account. So you get that from the App Store, and then look for BeefLedger when you search for groups, and you'll find the BeefLedger Global Group. Join that, and once you get there, you can just send a message into that group saying, I'm interested in buying beef tokens. And one of our team will then walk you through a process where basically we will issue you with a standard invoice, a proper invoice from a company in Australia. You actually pay goods and services tax on that to purchase these digital coupons, if you will. And then we will, and you can pay for that with PayPal, and then we send you the tokens in Telegram itself. So all of that transaction is very, very low cost. So that's how you can get started in the world of beef tokens. Once you're more familiar with it, you can buy real things and all that sort of stuff. Something to look out for coming forward will be our asset-backed digital tokens. And those tokens are tokens that have been issued as a unit in a unit trust.
It's a security.
So it will be a security, and it will be one that, in fact, we've issued it under license. One of our investment companies owns them, and we will be making some of them available on a secondary market, which will be on our exchange, which you can access through the beefledger.io website. Just find exchange at the top, and you'll be able to use beef tokens to actually purchase some of these asset-backed digital assets, and they will be called REG05. REG for regeneration, and 05, in fact, because it's the fifth fund that we've actually run with these class of units, but it's the first time we've issued them in a digitalized format.
Wow. So there's something for everyone. Cool. There's something for investors who are looking at getting into security. There's something for people who want to get beef, and then there's the crypto investment opportunity, and you can trade your beef if you don't like them. You can trade them out for BTC or whatever, and vice versa. Absolutely. If you don't like your BTC, you can get beef. I'm sure there's an opportunity there for crypto traders, but the whole underlying ecosystem is what's bringing the value to the beef token. And I think this has been a wonderful discussion, and I'm sure a lot of people are going to be loading up their Telegram app and looking for the BeefLedger app.
Absolutely. So, and we hope that we're just part of a movement, Tim. And other projects are already on the Telegram pathway, and it's all about making crypto easy to use for people.
Practical.
Easy, practical, cheap, instant. All the things that were promised by cryptocurrency, but have been cluttered up in a very expensive public network at the moment, where gas fees and all of that sort of stuff is making it really difficult for people. And in truth, all these other tools that we've all had to learn to use, like MetaMask and all that sort of stuff, they're barriers, right? So we're trying to help people navigate their way from the blue room to the red room, so to speak, to be able to do it safely, easily, at their own pace, and progressively learn about how they can take charge of not only their own assets and resources without having a middleman in between, but also how they can participate in economic systems, whether they're in natural resources, precious metals, or food systems that they can support, benefit from, and see them grow again without the traditional middleman in between taking the greater portion of the upside.
Warwick Powell, co-founder of BeefLedger, on the internet, www.beefledger.io. Thank you very much, sir, for the insights that you've brought today.
Absolute pleasure, Tim.
Look forward to talking to you again soon.
Wonderful. Great. Cheers.